Hello everyone, we are currently in London, UK, meeting with some real estate folks and starting a rehab on a property. More to come. What I want to talk about today, it's been all over the news of course, mortgage rates. Done a number of videos on this, all this doom and gloom, the world is ending, clickbait. Yes, mortgage rates are going up folks, taking apartment rents in certain sectors with it, cooling home sales. The housing market continues to face headwinds as mortgage rates increased again. Yes, that's true. However, as we predicted over a year ago, mortgage rates will continue to rise. I'll put a video in the description. Currently reaching new 20-year highs last week at 7.73%. Yet, the record high rates have not created the crash or panic that's been predicted nonstop, ladies and gentlemen, panic porn that people with no understanding of the housing market or just looking for that clickbait stuff. What's the point of doing a video if you can't give people actual information? We're on the ground all over the world looking at stuff. So the new hikes push the 10-year treasury rate. That's the gauge economists use to forecast 30-year fixed mortgage interest rates, changed, to, let's say, 3.71%, its highest level since 2011. So forecasters predict that the Fed will boost its benchmark funds rate to 4.4% by year's end and up to 4.6% in 2023. So that would be the highest level since 2007. Based on these moves by the Fed, mortgage analysts say, 30-year fixed home loans easily could reach or surpass the 7% level by end of 2022. I did a video saying they'll go to 10%, some of it tongue-in-cheek, but from the internal data and talking to people in the industry, it's there. So, by earlier interest rate standards, that's still, these rates still can be considered affordable. We have been spoiled in this current market. In 1994, the benchmark 30-year fixed mortgage rate averaged 8.75%, and we're inching towards 9%. 28 years ago, home buyers needed an income of roughly $46,200 to qualify for, a $100,000 home loan on a typical $125,000 house with a monthly payment of, let's say, $1,078. Today, a borrower who places a 20% down payment and takes out a 30-year fixed rate loan of $300K at, let's say, 6% interest, would make a monthly principal and interest payment of about $1,800. So what is interesting to me is the real estate news is still pretending that rates have not yet hit 7%, although that number is inevitable at this point, since the numbers they are basing their reporting on are trailing reports that trail the markets by roughly 7 to 10 days or more, and the current rate of 7.73% is already cooked. Okay, so if you do a quick Google search, the number one search engine in the world, they got the market of mortgage rates 7%, shows almost all reports that the rates are approaching 7%. That's pretty amazing. All the usual suspects, ladies and gentlemen, some of my colleagues have talked about in the past. I can't see the future, but I do my homework every day. And I look at reports, the macro, the micro. I talk to people on the street all over the world. I'm currently in London right now. I'm looking at everything. And we still are getting exaggerated reports on drops in the housing market, in my opinion. Here are some of the actual numbers with our current sales rate of about 4.7 million for the year. That's down from a record of over 6 million during the pandemic period and roughly 5.5 million or so immediately before. So, yet, at the same time, prices have risen by roughly 41% on average. So the total sales are much higher. At the same time, which home builders are caught with excess inventory in some overheated markets. You got to look at things regionally. And the truth is that the number of new homes built has risen steadily over the past 10 years when you look at things holistically, and has risen 6%, taking up much of the slack in the resale market. Look at this graph here. So sales are cooling off. not really declining. Inventory has remained pretty stable as sellers have enough equity to decide to delay selling rather than cut prices to avoid foreclosures as occurred in 2008, 2009. So that's what we see when you look at the internal day gauge. A lot of people paid cash for their properties during the pandemic. Yet the news is relentless in talking about the market going down, because those institutional guys at BlackRock are going to come in and buy when you're scared. Here's the latest, proclaiming you can almost feel the glee. Home prices are finally falling, but how low will they go? So, come on. Let's delve into some of the data. I've been through this stuff before. When you break down some of these articles, you have to read between the lines. Finally falling, right? Everyone, they're finally falling, as opposed to what? Finally, after CNN's wrong predictions over the year, perhaps, they've been wrong every time over the last year. Next, based on what? Sales activity has declined and home prices have fallen in a minority of markets. I always said look at this regionally, but overall prices have continued to rise, although at a slower rate. What is this based on? In select markets, folks, stuff is going over asking. Well, if you click on an article and read into it, in an almost throwaway line, they say that home prices are predicted to go down by Goldman Sachs and Wells Fargo Bank over the next year or so. While that may be true, it is not true that home prices are finally falling. It might be that they will, fall, but the headline is completely false. It's a misleading headline when you break it down. That's why you need strong real estate professionals who understand this stuff. Not only, but making financial decisions based on predictions from Goldman Sachs and Wells Fargo is like deciding, what numbers to play on advice from a Las Vegas casino. They have been consistently wrong over the past few years. 100%. These are the same people who insisted that the U.S. government printing trillions of dollars would not cause inflation, folks. I did videos over a year ago saying it's not transitory. I didn't want to scare everyone. It was transitory in the United States. It was transitory currently here. It was, temporary in the UK. Give me a break. They were wrong about that. You're going to believe my housing? But again, my point is no one is better at, predicting the future, but to show that the press is lying about what is happening right now. So what to do? What are you going to do? If you're looking to buy a home and live there for a while, your forever home, real estate has always been a great long-term play, a builder of wealth. And there is nothing to suggest it is changing if you can afford to own a home. And that is the key. Yes, these first-time buyers are going to be priced out in select markets. So let's say you want to move or you downsize. It's still a great market to sell, but a bit more challenging. And that's where your real estate professional comes in and their team. Than it was a few years ago when you just have glorified couriers. Finally, if you can find a property that will give you some cash flow, that is this is still a great time to get solid cash flow, enjoy those tax benefits of real estate. And that's what investors are lining up all over the world doing right now. Bottom line, impacted by higher rates, house prices are softening and home sales have decreased. But despite this decrease in sales, the number of homes for sale remains well below normal levels, and the smart money, ladies and gentlemen, right now is going into real estate. I know that in my head, and I know that in my heart. I'm not someone who just talks about this. I'm involved all over the world in conference calls and learning about what's going on, and then I travel to these markets to see if these people with the boots on the ground are telling me what's true. And I'm studying not just my local market, but holistically global, and that's when you working with a real estate professional, I hope they understand their local market, but ask them what's going on in Idaho, what's going on in Australia. If they can't answer those questions, they're not a good real estate professional. You have to look at markets globally, holistically, to get a better understanding of the local markets if you're looking to buy, sell, invest in real estate. And that's what we try to do at MB Global Real Estate Group and Concrete Real Estate Group. We work with the best. We understand these markets. We travel to these markets because if I have an investor that wants to invest in Ibiza, I just don't want to be partnered up with a real estate professional there. I need to understand this myself. And, if, our business partner buys in Ibiza, London, I need to get there and understand these markets. And that's what we try to do at our groups, to get up understanding the market. So it's still a great time to buy. You just have to be creative. Take care.